Yo, and we're on. Hey guys, welcome back to another week of fundamental analysis. Today I'm going to run through fundamental analysis for the 3rd of Feb to the 9th of Feb, and we'll also do a monthly recap for Jan. I did take a loss on UJ. The yen is doing extremely well right now, so took a loss on that. We'll go through on another video, but let's go through the fundamental analysis for the 3rd of February to the 9th of February. As per usual guys, just remembering that this is not financial advice. Please do your own research. This is merely my take on the markets and the fundamental news for the previous week. So COT reporting, we had you guys can see a big change for the yen, 5.17% change into the long direction. We had S&P also quite a nice shift for the S&P, the pound, the euro, the dollar slightly, and then you guys can see, Bitcoin, oil, gold even being bearish on the COT reporting for this week. It was NFP week, first week of February, and you guys will see these are the readings here. So we've had average hourly earnings being hotter than expected. We have manufacturing being hotter than expected, and actually the first month of expansion, which is really good, very good sign. We had services cooler than expected, but still in expansion territory. So all up, the change in these readings did sort of give me a neutral reading on the economic reading for USD for this week at least. I have also gotten rid of all the manufacturing indexes just to clean up my fundamental data a bit more. I think less is more when it comes to trading, and having economic readings as these 6 tenants I think will be a better indicator for me moving forward. Now the labor market, NFP week, we had NFP being cooler than expected, however a revision up from last month. We also had JOLTS job openings being cooler than expected, but funny enough, unemployment rate was hotter than expected or better than expected, being at 4% over 4.1%. So overall, it sort of led me to view USD or the US economy as being quite neutral this week, especially the economic and labor market readings. We have signs of bullishness, we have signs of bearishness. I rather just sit on the sidelines until we have some new news, essentially. For Aussie, we had retail sales, which was neutral, so better than expected, still not in expansion, still in contraction, and a revision down. So mixed reviews. I'd still say for Aussie, it's still an overall bearish scenario. Yeah, not too much to comment on that. The yen, we had average cash earnings and household spending being better than expected by quite a considerable bit as well. So average cash earnings being 4.8% over the forecasted 3.6%, and household spending actually previously being negative 0.4 with a forecast of 0.5 and now a whopping 2.70% as the actual reading. So very bullish on the yen. We had unemployment last week as well being very bullish. And then now COT reporting for the yen. So very, very bullish on the yen this week. Now in terms of the actual charting, let's go through what we have change. ISM manufacturing and services. So manufacturing, the first month it's ever been in expansion in the last 13 months, I believe it was. Which is really good and also hotter than expected. We had services coming down, still in expansion territory, still within that relative bracket. So I'm not fussed with that. I think it's still an overall quite a strength in the US economy for the ISM readings. Average hourly earnings of US also bumping up to that peak high of 0.5%, which is very good. Retail sales coming down for Aussie, right below 0, which is not great, but again, we're just seeing sort of weakness in the Aussie market. Unemployment NFP, we said huge drop down, but again, huge revision up from around 250k to 300k. So very good rereading or revision for that last month, but a big drop down for this month. So I would say a neutral reading just because of that revision for last month. If that wasn't there, this is definitely a cooler than expected reading and a bad print for the US economy. Jolts coming slightly down, slight revision up, nothing too crazy. I think it was like 0.8 on the dot, so not too fussed with that reading. I'd take this as an overall bearish reading for the US economy. But then we had unemployment rates, which was better than expected two months in a row. So, and you can see it's steadily coming down. So very, I think the NFP reading this week was quite good for the US. It wasn't amazing, which is why I'm sort of slightly bullish to neutral for the USD until we get more readings like, let's say, retail sales, consumer confidence. Then we can really have an indication on where we want to take our trades according to the US pairs that we have, as well as our indices and gold. So this week's data, what we've written down is it was obviously NFP week. I said overall quite a decent reading for NFP week, even though Jolts and NFP were cooler than expected. So Jolts there and NFP there. NFP revision last month was upwards 100k for the previous 2 months, indicating a strong end to the 2024 period. This paired alongside hotter than expected average hourly earnings, which is here, and unemployment rate, which is here, indicates still strength in the employment and earnings of the US economy. So again, I think it's a good reading. Speculation that we might not get rate cuts as early as expected because there's still some solid readings from NFP week. I don't think there's too much to say. I think I'm right now neutral for USD, but as soon as we get any other readings that are better than expected and we pick up again, I'm more than happy to jump in the US markets. Which is moving on to the next session, which is CPI for next week and core retail sales. So if core retail sales comes in quite bullish, better than expected, I might look to get in. If core CPI and CPI was cooler than expected, alongside better than expected retail sales, we might start getting in our US 30 trades again. So bias wise, we had gold. COT reporting last week was bearish. News was sort of neutral. We had lowering US inflation, which is positive. Neutral US economic reading, which is it's a positive. Neutral US labor market, which is again a positive. Look, we could trade gold. I just prefer not to right now. I think it's pumped up enough to where I'm not really confident in getting gold, especially at all-time highs for myself personally, until we have really weak US economic news and really weak US labor market. We're just going to stay on the sidelines. So let's just say for next week, if we've got lower inflation and we have poor retail sales, we might be able to get in gold, but for the time being, let's just chill out. US 30, we had lowering US inflation, which is good for US 30 and all the indices. We have neutral economic reading, which is not a good sign. We want obviously good economic reading, spending, earning more, so that we can have the people put money into the indices and the risk assets. And we had neutral US labor market. Again, we want a strong labor market. We want money flowing so that we can put it into these companies. So no trades on gold, no trade on US 30. Now AU, we had COT favoring USD. We had news being quite neutral, and bias as a result is quite neutral. So there is slight weakness in that in the Aussie, being the economic readings and lower inflation readings. And neutral USD, but it's not strong enough for me to actually trade this pair. UJ, on the other hand, we had COT reporting really favoring the yen. We had the news really favoring the yen, more people earning, more people spending, and therefore my bias is to the yen. So we had neutral USD and strength in JPY. Means long trades available. However, again, because it's neutral and not extreme weakness in the USD, I'll be happy to trade long with a half risk or just minimal risk. taking that into consideration. AJ, on the other hand, because we have weakness in the Aussie with economic readings, lower inflations, and even just COT reporting being not as strong as usual, means I'll be happy to take short trades to favor the yen with my 1% risk that I usually take with the full risk. So those are the two I'm going to watch this week. In terms of, I'm still in my US 30 trade right now, which we'll go through. We'll go through right now. So basically, US 30 last week, we were quite bullish. This was previous to the NFP week. So if we go to here, this would have been this week here, which you guys can see as quite bullish, you know, a lot of greens, lowering inflation, which is good for indices and risk on assets, quite green and bullish on the economic readings and bullish on the labor market readings prior to NFP week, which means we got in on a 4-hour candle. You guys can see it was on an uptrend. We're reaching all-time highs. I did note an all-time high, but nevertheless, from a 4-hour perspective, if we get rid of that all-time high, we had a big gap in the market. It filled that gap. It was a big engulfing. Previous zone here was rejected with a big engulfing. So I think this area here around $44,000 is a key area, a key support level. So I got in on this engulfing candle at around 6 a.m. On the Tuesday, Sydney time. Stop loss under, giving quite a bit of room here. You guys can see we did pump up, test these all-time highs, come back down, but I'm going to leave my stop loss there. I'll let this do its thing. Again, I've already put a set risk, a 1% risk on this. So if it takes me out, it takes me out for 1%. If it breaks through, I can move my stop loss around here and I have all that upside, all that reward potentially up available. I've already calculated my risk. I'm happy to take that 1% loss. The loss on UJ here, we'll go through on the other video on our monthly recap. But yeah, that's pretty much it for this week, guys. Let's actually jump on this. So let's see if we can mark up AJ and UJ. Right now, daily AJ, you guys can see slightly bearish, but not very clean until we break this part. So I think as long as we break this cleanly, let's just mark this down, dotted line. If we can break this cleanly, we jump on the 4-hour. If we can go like this, bang, come back up, we might get in, or even retest here, we might get in trade there. But for the time being, we're on the sidelines. No alerts for this one. UJ. So UJ, we took that loss there. Let's see if we can get bearish trade on UJ. No real zones that are strong in my opinion. Maybe even just retesting here, which was my actual entry going long. We might see, depending on how price action goes, we can potentially come back here, or maybe even here. I think would be a better, I think over here would be a better entry. So what we'll do is we'll pop that there, get rid of this daily here just to clean it up. But if price can come back here, we might be able to get a short position depending on the candle, and we could bring that down there. So those are what I'm looking at right now, guys. We'll keep this US 30 trade on, get stopped out or get tagged in profit, and I will catch you guys on the next week and the next video. Peace.